Welcome to The Explainer. Today, we're diving into the world of the ultra-wealthy to unlock the secrets of how the very best investors on the planet actually grow their money.
It's a pretty bold question, right? But it's really at the heart of this explainer, which is based on the book The Holy Grail of Investing by Tony Robbins and Christopher Zook. They make the case that the playbook most people use is, well, totally outdated, and that there's a whole new game being played by those in the know. All right, let's get into it. Our guide here is Tony Robbins. Now, he used his incredible access to the world's financial titans. We're talking people like Ray Dalio, Paul Tudor Jones, and he asked them one simple, really powerful question. In the world we live in today, can the average person still actually win the investment game?
And the answer that came back from every single one of them was this emphatic yes. But, and this is a huge but, it came with a major catch. The strategies that worked for the last 50 years just aren't cutting it anymore, because the entire financial landscape has fundamentally changed.
So here's the first big shift. The number of companies you can buy on the US stock market has literally been sliced in half since 1996. Now, all that growth, all that opportunity, it hasn't just vanished, it's moved. It has migrated over to the private markets. That's where the smart money now goes to find the really big returns, long before a company ever even thinks about going public.
So if the whole game is moved, what's the new playbook? How are the world's best investors getting these incredible returns? Well, it really all starts with a core philosophy from the legendary hedge fund manager, Ray Dalio.
Dalio's whole concept of the Holy Grail isn't about finding that one magic stock pick. No, it's about finding multiple, high-quality investments that are non-correlated. All that means is they don't all go up and down at the same time. When one zigs, the other zags. And that creates a portfolio that's incredibly resilient, one that can do well in good times and in bad.
And this right here is exactly why the ultra-wealthy are so focused on private markets. The data is just staggering. If you look at the 36 years from 1986 to 2022, the average private equity investment returned over 14% a year. Compare that to just over 9% for the S&P 500. Now, that 5-point difference might not sound like a lot, but believe me, over time, its effect is absolutely explosive.
And this is where that difference becomes truly life-changing. It's all about the power of compounding. $1 million in the S&P 500 would have grown to a fantastic $26 million. Awesome. But that same million in private equity, it would have ballooned to nearly $140 million. That is over 5 times the return, just by fishing where the fish are.
Okay, so we've established it. Private markets can deliver incredible returns. But for most of us, just getting access has always been this huge barrier. And this brings us to what the book calls its single biggest aha moment. A strategy that completely flips the model on its head. It's called GP stakes.
Let's really break this down, because it's a huge shift in thinking. See, normally, when you invest in a fund, you're a limited partner, or an LP. You're just a passive investor providing the cash. With GP stakes, you skip that entirely. You actually buy a piece of the firm that manages all the funds, the general partner, or GP. You're not just a client anymore. You actually become a partner in the entire business.
And why is that so incredibly powerful? Well, it's because the GP makes money in 2 very distinct ways. First, they collect a steady management fee, usually about 2% of all the money they manage. This creates a really reliable, predictable stream of cash year after year. And second, they get a big piece of the profits, typically 20% when their investments do well. So by owning a stake in the GP, you get to participate in both of those revenue streams across every single fund they manage.
This is the perfect analogy for it. Investing in just one fund is kind of like betting on one horse in one race. But owning a piece of the GP, that's like owning the entire racetrack. You profit from every single race, every ticket sold, every bet made. It doesn't matter which horse wins.
And here's another way to think about it. Owning a piece of the GP gives you diversification across time. You're not just exposed to one fund that was launched in one specific year. You get exposure to all of their funds, past, present, and future. You own the whole vineyard, not just one year's bottle of wine.
So let's see how this all builds, because the Holy Grail portfolio isn't just about GP stakes. That's a huge piece, but the book explores a whole universe of other unique, non-correlated assets that the world's best investors use to build true, lasting financial resilience.
Take professional sports, for example. Major league teams are basically legal monopolies. There's a fixed number of them. And their revenue isn't just from TV rights, which are massive because it's must-watch live TV, but also ticketing, merchandise, sponsorships.
And think about it, fan loyalty is incredibly strong. People show up in good times and bad. All of this creates this remarkably durable, inflation-resistant asset that just performs on its own terms, no matter what the stock market is doing.
Here's another fascinating example: energy. Now, this isn't about ignoring the green transition, it's about understanding that it's a multi-decade process. And while all this investment has been flowing out of traditional energy, very few new projects are getting funded. That has opened up a huge supply and demand gap. The world's need for reliable, affordable energy isn't just going to disappear overnight. So this imbalance has created a classic contrarian opportunity, letting savvy investors capture these strong cash flows from vital, underinvested assets.
So, look, the crucial point here is not that you need to go out and buy a sports team tomorrow. Of course not. It's about adopting the mindset behind these strategies to build a more robust, more resilient portfolio for yourself.
And it all really boils down to a few core principles. First, like Warren Buffett says, rule number 1, don't lose money. Protect your capital above all else. Second, seek out those truly non-correlated assets we talked about. Third, start thinking like a business owner, not just a stock picker. And finally, always look for opportunities with asymmetric risk, where your potential downside is small, but your potential upside is massive.
You know, as the entire game of investing continues to change, the ideas in this book really challenge us to ask that fundamental question. That old 60-40 portfolio of public stocks and bonds, it may not be enough anymore. Building true, lasting financial freedom is going to require thinking differently and adapting to where the world and the money is actually heading next.